Our next guest thinks that there is nothing to worry about. Joining us is Evercore's founder and senior chairman, Roger Altman, who's here with us at Post 9. Roger, good to have you. Did I get that right?
No, I wouldn't say nothing to worry
Okay.
about. I think what you're referring to is there will be an agreement. And the question is when, not if. Now, very short term, I think the United States has the advantage simply because we import so much more than China does from us. And so in terms of weeks, there can be a tariff war and we have a short-term advantage. But medium term, let's say months, I don't think that's viable. And I don't think it's viable because, one, the U.S. stock market likely weakens. Trump has shown a lot of sensitivity to the stock market, not likely to tolerate that. And two, his strongest political advantage is the economy, which is doing extraordinarily well. But a series of retaliatory actions from China over months rather than weeks could also undermine that, and I don't think his toleration or our toleration as a country for that would be great. So this could go on for weeks, but I don't see it going on for a series of months. And over the very long term, I might add, China has the advantage because there's so much skepticism about the enforceability of any agreement as it relates to intellectual property, technology transfer, and so forth. And that, I think, is what's going on a little bit in terms of China backing off from changing the laws underlying this.
Does it matter whose tolerance for pain is higher at this point? And if so, whose is it?
Well, as I just said, short term, I think our tolerance for pain is a little higher because on any given day over the next, say, 2 weeks or 3 weeks, the pain on China is greater because of the import imbalance. But I think it's mutually assured destruction over more than just a short term because of the possible impacts on the stock market and the economy here, and of course the continued impact on China. So my point is there will be an agreement. It could take weeks. It won't take months.
Wait, weeks, not months, really? You think it could be that soon? I mean, why would you have that confidence?
Well, this could go on for, let's say, 6 or 8 weeks, or even a few more weeks. But is it going to go on for 6 or 8 months? No. And it's not going to go on for 6 or 8 months because of what I said. I mean,
you really think because they'll react to the stock market and/or the economy will actually start to suffer?
Well, if you were in President Trump's shoes, David, and
yes,
and imagine yourself there.
Okay. Yes. Okay. I'm trying to banish that thought. But go ahead.
And you were thinking, of course, toward your reelection, which, just like any other president he is. You say to yourself, what's my strongest card? My strongest card is the economy. What's the one thing I can't trifle with? That's the economy. Would 6 to 8 months of retaliatory actions from China potentially undermine the economy? Yes. Am I going to take that risk? No. So
that's if things were to deteriorate even from here. I mean, the fact is they are emboldened by a 3.2% print on GDP, a 3.6% unemployment rate, all in the face of existing tariffs and tension between the two countries.
Yes. But I think if you say to yourself, well, could we have a tariff war for 6 to 12 months? I think the strength we've just seen could weaken. Mm-hmm. And I think if you're President Trump, you don't take that risk. Now, of course, I can be wrong. It's just a judgment. But I do think there'll be an agreement, and not smart enough to know if it's 4 weeks or 8 weeks or 10 weeks, but I don't think it's going to extend over many months.
So we're all trying to figure out what, if there was an agreement, that would do to the economy. You talk to so many businesses, advise them on deals and IPOs. What's your sense of how much activity is being held back right now? Because planning decisions are hard to make when you don't know if the tariff rates are going up and whether tensions are going to accelerate again.
Sarah,
like
I don't know about the last 48 or 72 hours, but the answer is no in terms of activity that had been held back before this latest spike in trade tensions. I mean, and you see it in the data. I mean, if you step way back, the idea of this strong data this late in this expansion is unprecedented. To have 3.2% growth, to have 3.6% unemployment, to have 2 to 2.5% productivity gains, the wage gains, at this stage after 9 years of expansion, 9 to 10 years, depending on how you measure it, that's unprecedented. And so we have a remarkable situation in terms of our strength, and that's one of the many reasons that if you're President Trump, you don't want to trifle with it very much, because history says that if the economy remains that strong, President Trump will be hard to beat. from a re-election point of view.
No, I'm just wondering if the economy gets even a further boost. I mean, business investment, for instance, was not that great in the last GDP report. It's been held back. I wonder how much uncertainty is playing out there, which could unleash some real investment if this trade deal gets done.
Well, but look, let's just assume we were having this conversation a week ago. I don't think the answer is much being held back, because a week ago, and there was I think a chart this morning on Bloomberg that showed this.
We don't know what you're talking about.
Well, I know.
Never heard of
I know.
it.
No. It's a startup. But this chart that showed the percentage of earnings calls in this cycle on which China was mentioned.
Oh, yes.
And the answer was, that small. And so that tells you that at least as it relates to the tariff and trade tensions, there hasn't been much concern recently, because the assumption has been we're going to have a deal. And therefore, I don't think that at least has been restraining investment. Now, and I don't see any other factor that would be restraining investment either from the point of view of uncertainty. I mean, any individual business is making judgments about its outlook and
Brexit,
and how much it wants to. Well, that's a limited factor for most companies. In financial services, it's a big factor, but for most companies, that's a limited factor.
I mean, let me ask you this. What's to keep the Chinese from employing a rope-a-dope strategy where they appear to make progress, pull back, make progress, pull back, and just wait out the clock till we get into the prime election season?
It's a good question, because if it comes to issues like changing their laws or putting in place some regime of enforcement that really might work, that's very, very hard for them to do. And I don't think they want to do that. And at least the framework I outlined a minute ago suggests that a rope-a-dope strategy would work for them, because if you get into 2 months or 3 months or 4 months, our tolerance goes down.
Right. So the president sees that, hence his tweet this week, right?
Yeah, he sees that. But on the other hand, he obviously has sold himself for a very long time as a master deal maker. He needs a deal at some medium-term point to fulfill that. He also needs it for the reasons I talked about in terms of the stock market and the economy. So if you're China, you say to yourself, if this goes on for months, not weeks, the U.S. will want a deal more than they do.
Can't let you leave without another core competency of both of ours, M&A. And it goes to CEO confidence as well, which you mentioned in part to Sarah's question. Where are we? First quarter wasn't great. Are things picking up? Do you expect that that CEO confidence will actually result in more deals?
Conditions are good. You're right. The first quarter data, global M&A totals in dollar terms was off, I think 17% year over year. But conditions are good. And for most firms, backlogs are up, not down, and various technical indications of strength are up. And you just have very strong fundamentals. You have, despite the weakness today and yesterday, you have strong equity markets, high valuations. You have, 10-year Treasury this morning, 247, robust credit availability, pretty good levels of business confidence. A few spots like Brexit, but generally pretty good. And when you continue to have those factors, you have strong transaction volume. And so the outlook, at least this moment, is pretty good.